Very good afternoon to all. I know it's quite difficult to keep ourselves awake, especially post lunch, unless Tom Cruise with a daredevil action scene or Shah Rukh Khan with a romantic song actually enters. But I'll try my best to keep you awake. First of all, let me thank Business Wall for inviting me to speak. It's always been pleasure to interact with the industry leaders. There are so much to actually, gain from their practical insights, which are really useful for policy making. I think the CFOs, the CBOs, the CTO, and the CRO, they are the four foundation pillars of the corporate governance architecture of a company. All these fours have been playing, very, very critical role in ensuring the high standards of corporate governance and, act as a check post for any spillovers. Having said that, I thank, Business Wall for organizing and taking lead for recognizing those leaders, especially the CFOs, for their great contributions in their respective field. I extend my, congratulations and sincere thanks to the winners who have lifted the award and probably those who are, waiting to lift the award in the evening. The event actually being organized at a time, especially when the financial sector, evolving in the recent past, driven by emerging technology. The last decade, what I feel is that, was driven purely through digitization and digital transformations. The present decade, we are talking about emerging tech like AI, ML. And the next decade probably will take us, through beyond our imaginations by emerging techs like cloud computing, quantum computing. So from mere, digital transformations to AI, ML driven technology to actually, making ourselves ready for quantum computing. So those are the kind of, the evolutions that have been taking place in the financial sector, and the financial sector, of course, in terms of deployment of technology, is quite mature as compared to the rest of the sectors. Before speaking to the area, let me take you, for a while, we as a country, where do we stand today, and what are we aspire to actually, go probably a decade or 2 decades later. So with that, let me put certain macroeconomic indicators. We all know that despite many odds, geopolitical hostilities, trade wars going around the world, we have the supply side disruptions. Lot of difficulties are being actually facing by the countries all around the world. And beyond that, there are certain inherent institutional issues, domestic issues. But even then, India has been actually able to maintain a quite high and sustained, economic growth rate. Today, what we saw is that the Q2, GDP growth stands at around 8.2%. We are the, fourth largest economy with close to $4 trillion economy, and probably we are aspiring to actually reach to $30 trillion economy by 2047. There is a huge buoyancy in the overall, tax collections, especially the increase in the GST collection, which indicates a healthy business growth. We have a historic high foreign exchange reserve, roughly around 700 billion US dollar, probably highest in the world. So is the case with the BFSI sector. The BFSI indicators, looks very sound, stable. We have a, very a healthy, banking sector. The overall gross NPA and net NPA of the banking sector have been going down. We have witnessed for the first time this month that credit surplus the deposit, which itself is actually a very, very positive indicators that signals that actually there is no dearth of money. Money is available in the, market. Probably what we require sound and sustainable business models. One of the very, very, important factor behind the sustainable and high economic growth rate is a robust and resilient financial sector. So this resiliency actually shows a healthy balance sheets in the banking sector. There are, positive sentiments all across the investors, domestic institutional investors, foreign institutional investors. The overall policy and regulatory, environment are quite friendly and supportive to the businesses. The consumptions are actually, derived through increase in the income level and through fiscal supports. For instance, 2-3 months back, there was reduction in GST and they drive actually, consumptions beyond what the industry expected. Regulatory easing to ensure that there is a sufficient liquidity in the market. We have seen some of the very, very, supportive interventions by the regulator. RBI in last 2-3 months, they have also allowed, the bankings to finance the merger and acquisitions, buying stocks, equity from the market. Those are the different, interventions from the government, from the regulator, and also, supported by increased consumption level by the, public. So, some of the key actually drivers behind these robust and resilient financial systems are the first, what I feel is that, digitizations and digital transformations. We have seen that there are a lot of, digitizations all across the government and private sector. Today, India stands the third largest digitized, country in the world. We are slightly behind China and US. We are the highest recipient of, inward remittances. In the year 2024-25, roughly around 130 billion US dollar, remittances were flown into the Indian economy. And in terms of readiness of our AI, deployment, so we are the fourth, globally recognized, AI standards. So if I talk about the digitizations and digital transformations, it will not be completed if I won't speak about the DPIs, digital public infrastructures. As we all know, DPIs are the foundations of, entire digitization efforts of the government. These DPIs are multi-layered, architectures. We have the layer 1 Aadhaar, which is the identity layer, the layer 2 payment layer, which is the UPI, lending layer, the unified lending interface, data layering, we have the account aggregator, data storage, DigiLocker. So these actually DPIs have been, facilitating the business entities, especially the fintechs, to come out with different, innovative solutions to, provide the banking services to those who are unbanked or maybe, located in interior areas. So these DPIs have their own, inherent strengths. They are much faster, much, scalable, transparent. So because of these, I think there are a lot of, developments happen with regard to the financial inclusions to the length and breadth of the country. So the last phase was driven by digitization and digital transformations. The present, decade, I feel it will going to be derived by the AI. So in terms of, readiness for AI, I feel there are three, again, critical layers of AI. The first layer is compute. So in terms of ensuring that there are sufficient, computing facilities, the government have been, taking various initiatives. The existing GPU, which is roughly around 18,000, are expected to reach 38,000 by 2030. The government of India already set up a India AI mission. These compute facilities are being provided, as a public good through the facilitation of cloud services, and this has resulted, the cost of using these facilities roughly around by 40%. The layer 2 is again the data layer, to ensure that there is a seamless, data transfer, connectivity and discoverability. The government of India, set up a AI coach. The AI coach actually support various institutions to create and deploy innovative AI solutions. The course is presently house 3,800 data sets uploaded by 53 organizations. It already built 251 AI models, 30 use cases, and these are being widely used, by entities across businesses. Layer 3 is the connectivity. Under the BharatNet, 2.8 lakh gram panchayats are being connected with high-speed fiber net. 6G, rollout plan is at a very advanced stage, and we are hopeful that by 2030, the 6G plan will be rolled out. Energy storage, which actually plays a very, very critical role to ensure that data centers or the global capability centers are running smoothly without any interruptions. These energy shortages have been reduced from 4.1% to below 1% presently. As I am speaking, that there are a lot of initiatives at the government of India level, regulators across different sectors. There have been, various initiatives taken to establish center of excellence sector-wise. There are already 58 center of excellence which have been approved to be, set up across different states. The government of India has also, launched a scheme, research, development and innovation schemes, with a, funding provision of 1 lakh crore to strengthen the R&D initiatives led by the private sector. There is also an interministerial committee which has been constituted to ensure that the AI deployment by the business enterprises are based on certain ethics, certain principles. That committee has been reviewing and issuing various guidelines from time to time. The second broader aspects with regard to financial architecture is the fintech and the financial inclusion. Fintech has been playing a very, very critical role in ensuring that financial services are, made available to those who have not yet been actually, brought in the financial net, either by ensuring, digital services or ensuring the last mile connections. Currently, there are more than 11,000 fintechs who have been working, across different segments with a cumulative investment of $34 billion US, and the market size of fintech is expected to reach $420 billion US by 2030. Financial inclusions, when we speak financial inclusions, the GEM Trinity, which is very unique. It's a fusion of, deployment of technology, delivery, and the inclusions. So we have witnessed the kind of, the interventions that the platform has delivered in the past. Through the platform, roughly around 47,000, crore rupees have been transferred to the sections of the people which are being covered under different flagship schemes of the government of India. Social sector schemes like Atal Pension Yojana, Prime Minister Jeevan Jyoti Bima Yojana have expanded the social safety net to millions of Indians. Credit guarantee schemes like CGT, MSE NCGTC or credit, enhancement schemes like PM Swanidhi or PM Vishwakarma. They have enhanced the, credit to the street vendors, MSME, women, marginalized sections. The third important aspects of financial architecture, which have actually, enable the businesses to flourish, is the regulatory and policy overhauling. In the last few years, we have seen a lot of, regulatory overhauling. The Reserve Bank of India have been issuing a lot of, guidelines, master directions based on the technology that have been keeping place from time to time. Recently, they have reduced the number of guidelines, circulars issued from roughly around 10,000 to 250 to ensure that there is a easy, understanding of those guidelines. The Ministry of Finance is also working on a FinTech Vision Strategy 2047, looking at, India to establish the FinTech capital of the world. There are similar, other initiatives taken by the regulator, which are typically, looking at more and more innovation enabling. For instance, the regulatory framework recognizing the self-regulatory organization SRO is one example where the regulators is looking at to actually keep a balance between the regulatory compliance and the innovations. Sandbox is again, another area where the regulator has been enabling the, tech-driven companies to experiment their innovations under control environment and to actually make them ready to, go to the market kind of a scenario. The fourth most important, pillars of this entire financial architecture is consumer protections and grievance redressal framework. The entire journey was actually, began with looking at, hearing at the customers in terms of the service delivery, their satisfactions level. Now we move from, the quantity of grievance redressal to quality, how those grievances are actually getting redressed. There are a couple of, regulatory interventions. The Reserve Bank of India, they have one nation, one ombudsman schemes. They have also ensured that the banks should have a internal, ombudsman, and especially to look at those grievances or, concerns of the customers where the banks are straightforwardly, saying that there is no solution. So there is, a separate kind of interventions to look at those, customer-centric approach or ensuring that there is a, solutions to address the customers, problems. Going forward, there will be a lot of, new elements. The Ministry of Finance have already started, giving ranking to the financial institutions based on their, customer-centric approach, the innovative, tools. They have deployed a lot of banks. They have deployed AI-based, chatbot to assess the customers' feedbacks. So we have started ranking the public financial institutions, and going forward, we have already started discussions to also engaging the private sectors and bring the entire, BFSI fraternity into one common platform to ensure that there is a, digital trust, built up in the entire ecosystem and through the interventions of technology. So these are the four, broad buckets which actually have played a critical role to ensure a robust and resilient financial sector. And going forward, there are certain areas probably, where we need to look at or discuss, deliberate more and more. Some of those areas, I wanted to just, flag. Of course, from the government of India, we have been looking at to take the sound, fintech solutions, especially, fintech solutions are far-reaching and very mature in the payment segment. UPI, RuPay, these are the solutions which have been actually, global standards. So we have been taking up a lot of initiatives on a country to country, regulator to regulator. Going forward, there will be more, initiatives, perhaps, ensuring cross-border, payments and trade settlements, and especially, given the kind of, situations that countries like India have been facing today, especially where there are sanctions from different, parts of the world. We need certain alternate payment systems so that, those sanctions could be taken care of, and the settlements could also parallelly take place. These alternative payment systems may be similar kind to the kind of the Euro zone. They started with a Euro zone, then they actually came out with a Euro as a currency. So probably we need to actually look at whether we require, the alternate, region-wise payment, and settlement systems like SWIFT, or probably a substitute of some of the, global currencies. It's maybe countries or blocks like BRICS, which consists of roughly around 40% of global trade. So having a kind of, a payment system among the BRICS country actually would enable, settling the cross-border payments among the nations. Another area could be integration of fast payment system, integration of UPI with similar payment system across the world. There are a couple of such, integrations already happen with some of the countries. Presently, it is available with Singapore, UAE, France. Some of these countries are interoperable, both P2P and P2M. Going forward, we'll be having more and more such, cross-border integrations. The another use case is cross-border CBDC. So cross-border CBDC will actually, ensure that this kind of a, scenario, trade disruptions will be taken care of, and, there will be a bilateral settlement of your trades and other issues. We have another challenge, more and more we expose to emerging techs like AI. We have the other sides of these technologies. Cyber security is, these sides. So going forward, the quantum computing will be having a lot of challenges actually to decrypt the, the present encryption process. So going forward, we need to have more and more international collaborations like, International Cyber Alliance. To actually take these cyber security issues, we need some kind of a alliance with like-minded countries, because these issues requires cross-geographical collaboration with law enforcement agency, with the regulators across different segments. We also need to actually, move from mere inclusion to well-being actually. So far, we have been talking about inclusion, and we have done enough. We already actually reached to the saturation level. From the inclusion, we need to ensure that there are sufficient, money in the hands of the people actually, so that they can take care of their well-being. From well-being to empowerment, that empowerment will actually, enable through API. So extends more and more decision-making power to the people, from speed and scale to secure and trust, and from regulation to self-regulations. So going forward, these will be the issues where we require more and more discussions, deliberations, and as I'm saying that, AI will take us to a different level what we stand today in terms of delivery, in terms of, improvement of the business performance, and in terms of making that, the satisfaction level of getting those services. But going forward, the quantum will actually, bypass the potential of AI, and will be having a lot of challenges going forward. So we need a lot of focus, including R&D on deep tech, quantum proof, solutions to look at, our service delivery mechanisms probably from 10 years now. With that, I will pause here, and I once again thanks Business World to give me the opportunity to speak. And last and list my best wishes for all, to have engaging discussions going forward. Thank you all.